Hey, good morning. Jack McGrath with NakedTrader.com. Running a little bit late today. I apologize for that, but I've had some volatility going on here this morning. The futures market, there's a rumor going around that TradeWeb had an error, sent the 10-year note down to its lows. Now it's trying to fight its way back up, so we'll see if we can get any follow through. I think you got to keep an eye on 28 and a half area again to see if we can get back above there. That 121.04 was today's pivot. The high, if you look at the 10-year, when you draw off a line off the old highs, came right in at the today's high. So we are fighting big area on the upside resistance. It is paid to sell up against these levels, and so I would like to see the market have a little bit more follow through on the upside with good closes before you really get jumping up and down bullish here, because the market has been trading in a range for the last month, and that very well could continue. You could see the 10-year trade all the way back down to 119 and a half. Really doesn't change a whole lot. You're just still in the range that we've been in. So that's something to keep in mind. Now the red mark specifically today, I sent out a chart this morning with some levels. You had the 100-day moving average 99.10, 50% retracement from 99.44 and a half down to 98.77 and a half. That comes in at 99.11. You have 13 and a half, which is the resistance off a little channel. You got 61.8 up at 99.19. I think the 10 to 13 and a half area is where you do have good resistance. I'd be looking to sell up against those levels. It worked again. It worked on Friday. It worked again this morning. So you want the market to prove you wrong. We would like to see closes above the 100-day moving average before you get all bullish there as well. It almost, you might think about buying a put spread on this next move up, looking for another, trade back down. Now, one thing I was noticing, I have a weekly pivot in the red March at 99.04. We went down a little bit ago to 4.5. Now, if you looked at today's range only in red March, you would look at the low, which is 4.5, and the high, which is 10.5. So halfway of that move on a day is 99.07 and a half. Let's see if we can get red March back above 7.5. It should be resistance if you're going to continue to come back down. So I'd keep an eye on this 7.5 level for the rest of the session. If you get above it, look for a retest of 10, 10.5. Maybe you get up to the 11, 50% retracement. If you can't get above the 7.5, look for a trade back down towards the lows. I like to use the retracements on a, if you get a range on a daily basis also. The Fibonacci retracements work very well. So that's something to keep an eye on today. Like we've talked about in the past, the volume here has been very light. It continues to be light, not a whole lot going on today. For example, I look at open interest in the options over 10,000, and then that's my threshold for putting out increases or decreases in open interest. We had none over 10,000 on Friday. So that gives you an example of the type of environment that we're in. That's about it for today. I did send out a red March chart for you guys this morning, so we'll see how the rest of the day goes. Have a good day. It's Jack McGrath with NakedTrader.com. Thank you.